Hello, everyone. Welcome to the Nailing FX series. We'll get started in about 6 minutes, 7 minutes from now. Hope you can hear my sound. If not, obviously you haven't heard me. Just a sound check. Hope you can hear me loud and clear. Thank you. Thank you for confirming. Hello, everyone. Let's get started. Welcome to the Nailing FX webinar, where we look at trading currencies, FX, planning for the week ahead. So today markets are closed today and tomorrow, and when markets open on Monday, we already have a plan. So that's what we intend to do with the uh, webinar today. It'll be a 1 hour session looking at the week ahead, having our plan in place. So sort of looking at trades that can last for the next couple of weeks. So we have a plan in advance. So Nailing FX is a series of webinars focusing on various asset classes. And we also have FX. So that's Trade with UFOs. We conduct various webinars and on Mondays, Tuesdays, Wednesdays, Thursdays, and Saturdays throughout the week. So I'll take you through and show you the calendar. We also do webinars on FX Street. So let me quickly take you through these calendars to show you some of our other webinars. So we have longer term. So that's our webinar focusing on, so we have stocks. We also look at futures, also look at stocks, look at options, various webinars. If you want to check out the entire calendar, you can check out tradewithufos.com/get together. That's where you can see the whole calendar and where you can make a plan on which ones you want to attend in the week ahead. Also like to show you the FX Street calendar. So that's the calendar for June at FX Street. So these are live webinars which you could attend if you happen to be around. So some of our instructors from our team, we have Andrew Hahn, we have Pedro, we have Bert, and finally I'm doing a session again on FX Street. That's on the 27th. So do join us if you can. So these are the schedules. Let's get back to, so let me read the disclaimer and then we can start the session. The following videos, clips, demonstrations are for educational and instructional purposes only. Predictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the results you may receive on using our products. Also, finally, a word of thanks for our sponsor, Axuri Brokers. So let's start the session. Let's plan, get going with the week ahead. So the first thing we do when we plan for the week ahead is look at the events and reports just to check for volatility. We're not looking at these events or reports with the view of what will this speech include, or for example, what will the interest rate change be? Will there be a change or not? And therefore, what will our trading action be? So that's not the purpose of looking at the calendar. The calendar, on the other hand, provides us with tells us when to expect volatility during the week. And if there are any significant events, then we can prepare in advance and not be caught on the wrong side, getting massive fluctuations in the market and not being prepared for it. So that's the purpose of looking at the calendar. Very important to be aware of when to expect volatility, while we're trading. So if we will be setting up trades, and that's the purpose of this webinar today, is to set up trades. We look at identifying trade setups and opportunities. So we have the ECB president's speech that comes up on Monday. Now these times are GMT, which is 1 hour behind London time at this point. So that's around afternoon time. We have ECB president's speech on Monday, so that's when we can expect. So Euro did make some major moves last week. We had almost 5 days of buying, except for Friday when we had a bit of a reversal, but otherwise Euro was pretty bullish last week, and we can continue to see some big movements coming out on the Euro, especially on Monday. Tuesday seems to be a quiet day, not many of the high impact reports. There are some reports, but not expected to be high impact reports, and therefore may not cause that kind of volatility in the markets. Wednesday, again, we've got big news. We've got CPI numbers coming out of the US. That's on 12:30 GMT, and around 1800 hours GMT, we have the interest rate announcement, which is the Fed funds rate announcement coming out on the US dollar. This again tends to bring a lot of volatility. Right now, we're not. The forecast is no change in interest rate. Right now, it's 0.25. Not that we're expecting a change in interest rate. However, there is a press conference that comes out half an hour after the actual interest rate announcement, which is likely to bring in some volatility. So just for us to be aware, Wednesday we can expect volatility, which can come after Monday, the ECB president's speech. And finally, to wrap up the week, around this is around close of the week. So we have consumer sentiment coming out of the US. Those numbers will be released on Friday, 1400 GMT. But this again tends to impact the equity markets more than the currency markets. But these will impact the currency markets quite significantly. Okay, so having seen the economic calendar, just want to check if there are any questions before we start. Let's go into the charts and start looking at the markets. We're using TradeStation. We're using some trading technology, which is proprietary of Trade with UFOs. I'll definitely get a chance to talk about it during the session. If you have any questions, please do post them. We can discuss these trading apps. So as you can see, some fancy looking markings on the charts. We can discuss this in detail. Okay, we always start with the dollar index. Dollar index being 80% of the forex market by volume. Very important to check before we start planning our trades on all the other currencies, including the cross pairs. For example, you may be trading NZD JPY or GBP CHF, any forex. We always start with the dollar index. Good to know what the biggest currency in the market in the world wants to do. Is it more likely to get weak or stronger during the week? Okay, hope that made sense. So to that extent, we start by looking at the dollar index. Now, on the left-hand side chart, I hope you can see at least through the watermark here. We're looking at the dollar index chart, the weekly chart. Okay, so that's where we get our initial orientation from. So the first point of check is to see whether what's the climate. So this is a trading app called AutoClimate, where we check. So the first point of check is whether it'll be a good idea to trade this week or not. And if yes, what should the direction be? Should I be a buyer? Should I be a seller? So to get initial orientation. So that helps us with not just the US dollar, but all the other majors, including some of the cross pairs as well. So just to get in terms of orientation, we're looking at the US dollar index, and we're looking at so the indicator, as you can see here, we have, so let me expand this a little bit just to explain this a little bit more. So we've got these dots and the lines projecting out of the dots. So if we see a thick dot, it means we have a confirmed climate. The market is showing us a direction. And if it's a red dot, we know it's more likely to go down. Okay, so where we have the thin dots, it shows that the climate is not confirmed. It's probably going sideways. Market is making up its mind, so it doesn't give us a clear indication of where the market is heading. But when the dot turns thick and we have the lines projecting out, that gives us an indication. Now we have a confirmed climate. In this case, we say it's a down climate. And what do you think our trading action should be if we have a confirmed down climate? So let me ask the question and hope to get some answers from the room. Yeah, so when we have a confirmed down climate, we will be looking to sell. So we'll be a seller. We'll be looking to sell or place short positions on the US dollar this week. That's what the trading app, based on statistics. Obviously, the trading app itself is based on statistics, looking at the behavior of this asset over a period of time and suggesting to us that it's showing the downward climate, and we should be looking for sell positions, short sell. Perfect, Miguel. Um, and so if we want to short, where should we short? So should we short here? For example, we can be shorting here, we can be shorting here, 97.50. How about 98.50? How about 98? We could be shorting different locations. Ideally, we want to know where exactly we can place the sell order, right? So which is why we move on to our second app. So on the right hand side on this window where we have the 240-minute chart of the dollar index, we turn on another app, a trading app, which uses a technology which shows us where the unfilled orders are. So let me just type that in. So we're looking for unfilled orders. So unfilled orders placed by the big institutions. That's what we're trying to identify with these apps. So give me a second while I change the colors. Give me a second while I fix this. Yep. So we're looking for unfilled orders. So if we have, so this app UFOs, AutoUFOs, is right now suggesting to us that there are some unfilled orders here, which means when price comes into this area, which is the 97.93 area, we have a very strong chance of reversal. So that's exactly what we want when we place the sell short position. Is we want price to come into this area, and we want to see price reversing, which is possible if we have unfilled orders located in that area. Now for this week, we have choices. Now we've got some unfilled orders here, we've got some unfilled orders around the 99 area, we've also got orders higher above. So what we'll do is, for this week, it's a confirmed down climate, we have UFOs. However, this being a week where we can expect some additional volatility. For example, if you see, this was most of May. Okay, so most of May we saw price just going sideways. So it doesn't look like market had any unexpected news. Market was just calming down after the big volatility that we saw in March, February and March, and finally it was calming down, and now we've seen some momentum towards the downside. So this week, when we have two big events, so as we were looking at the calendar, we discussed, why do we look at the calendar? We want to look at the calendar because we want to anticipate volatility, and we've seen the calendar. We've got two big pieces of news coming out, one on Monday and one on Wednesday, suggesting to us that we could have some additional movement, market reactions, more participants coming into the market, and therefore some additional movements. So what we'll do is we'll go with the second UFO here. Had it been a normal week, had it been another week, we could have probably taken this one here. We could have placed a sell short position here at 97.93, 98.24 area. Okay, but however, we're likely to see some extra participation this week, and therefore expect some additional movements. The 99 area is a slightly better area to short in that sense. Okay, so again, you can try using the app. You can do your back testing using the app, and you as you use it in your trading, you will realize that sometimes with additional volatility, we're just better off going with putting in some distance from where current price is at the moment and where we place our order. Okay, so the plan on the US dollar or the dollar index will be to sell short around the 99 area. Okay, so if that's our plan on the US dollar, what do you think our plan will be on the euro dollar? next we're going to move on to the euro dollar chart. And in this session, at least in the initial part, we will focus on the majors, the euro, the GBP, the NZD. We'll find some trading opportunities here. During the latter part of the 1 hour session, we could look at some of the pairs that you trade. Vincentius, perfect. Yes, we'll be looking to go long on the euro dollar. We know already. What about GBP USD? What about AUD USD? What do you think our plan will be on AUD USD, NZD USD? Yeah, just like the euro, we will most probably be looking to go long. We don't know yet. All long, yes, Negin shorts. Negin's got that. So it'll be mostly long. We don't know yet, but the US dollar gives us an indication that we are probably likely to find longs on the euro, the GBP, the NZD, AUD, etc. Okay, so we'll go through them one by one in the initial part of this session. We'll focus on the US dollar majors, the G7 currencies, the biggest currencies in the world, and towards the latter half, if you want, you can suggest some forex pairs, some cross pairs. We can look at a few, and that's how this session is planned out. Hope everything okay so far. Any questions? Any questions on the US dollar itself before we move on to looking at the euro dollar? All good? Okay, so let's move on and look at the the euro dollar, sorry. So the euro dollar, so again, here we are looking at, so step one is look at the bigger time frame. So we're looking at two time frames, right? We have two charts here. We've got the weekly chart and we've got the 240-minute chart. So on the weekly chart, which is the bigger time frame, right? So on the bigger time frame is where we check for climate. What does the weather look like? Uh, is the weather good, to go out and have a nice day, or is it better to stay indoors? Kind of indication. That's what we get from the auto climate. So while we're looking at the auto climate here, we see a blue dot on the US dollar. We saw a red dot, which was indicating downward pressure, or rather, selling pressure. What we see on the euro dollar is a blue dot or a sapphire dot, which indicates buying pressure, which, some of you already guessed from the chats. You already knew it, right? The US dollar already gave us the indication. Having looked at the US dollar chart, we already knew what to expect once we get into the euro dollar chart. And that's exactly what we find. We find the confirmed, what we call up climate. Is that fine? So this dot here with the projection of the line shows us a confirmed up climate, which means suggesting to us that we should be looking for long positions. So again, we're sort of looking at the inverse picture of the US dollar chart. Uh, sorry. Again, we had two choices when we went on to the 240-minute chart on the US dollar. We had two choices. We had a choice of selling closer, or selling slightly higher. In the case of the euro dollar, it's the inverse picture. Therefore, we have a choice. We can either buy here at 1.1217, or we can buy lower, 1.1017 area. Okay, just about the 1.1 area. So we have two choices. Now, what did we say? We looked at the calendar. We know there's some big news coming out on the euro, the ECB president speech, and last week we saw some major moves. Now, again, this came on the back of some announcements of stimulus for the eurozone economies, and that's why the euro shot up. Now, with the ECB president speaking on Monday, we could have some additional volatility. Now, the plan we have, the trades that we are planning in this session, and again, let me quickly go to the Excel sheet. We'll be jotting down our numbers here, our plan here, what will be the entry, what will be the stop loss, safety target, and we'll review this next Saturday. So this series, Nailing FX, so I'll be doing these sessions on Saturdays, planning for the week ahead. So next week we'll come back and plan these, review some of these trades that we planned, and if there are some special comments, I'll put them in here, remarks. So, sometime during the session, towards the end of the session, you can take a snapshot of this table. So you have the entire plan, including the remarks. Okay. So let's get going. So we said on Monday, so Monday market, when market opens, we may have a small gap up or a small gap down. Also remember that as the markets open on Monday, the Asian markets did not get a chance to react to the news, the employment numbers that were released on Friday. So yesterday, as you may recall, there were employment numbers that came out of the US, which was a lot of good news. About 2.5 million new jobs created in the US in the month of May, which came as a big surprise for most traders, most participants. But the Asian markets had closed by then, so most probably they'll be their first chance to react to the good numbers will be on Monday morning. So Monday morning, even before the ECB president's speech, we can expect some volatility here. We could see a gap up, gap down. Any of that is a possibility, and hence looking at so if we have a choice of placing a long position here, 1.12, that'll be rather close for comfort, with which is market may open with a gap down. We may already be trading in this area, and then with the ECB president's speech, this zone, we may just see price fluctuating around this zone. So this becomes a little bit too close for comfort. So the plan will be that we'll wait for a long in this area, the 1.1 area. So that's the reason we started by looking at the forex, the events calendar, so we know how much of volatility to expect. Some of the other weeks, so for example, in May, we would have been perfectly comfortable, or I would have been perfectly comfortable taking a long position here, 1.12. Nothing major, no major events reports coming out during the week. We can go close to current price, look for a long opportunity right here. Okay. Okay, so I'm just reading the comments. Vincentius in the Washington Post said it was an error in classification. Is that right? Since you ask, jobless rate drops, payroll gains signal a mending economy. So, yeah, I was checking. The news today looks like they're still talking about the jobless numbers going down. And if May is an indication, May was supposed to be a lockdown, so this came as a complete surprise. Now imagine, as the lockdown is lifted in various markets, we could see additional jobs being created, right? So it looks like it was the right number. And so so again, good thing is we're not trying to speculate as to what trading action should we take based on employment numbers improving. So we're not trying to trade the news or the impact of the news. We're just expecting additional volatility. So my point was, as the Asian markets open, that'll be their first chance to react to that news, because by the time the news had come out, those markets, the Asian markets, had closed, right? So that was the point. So the point is, Monday, even before the European market opened, even before the London market opened, expect some volatility. That's the only point I'm trying to make. And therefore, in the trades that we plan, we need to have that sort of create a buffer for that reaction to the news from the Asian markets. So likely that we see a little bit of a gap, maybe up, maybe down, could be either side. Hence, and then we've got the Fed funds rate announcement. Not that we're expecting a change in interest rate and therefore volatility. But anytime we have Fed funds rate announcement, we just need to factor in some additional volatility, some additional price movement. Okay, so unfilled orders, UFO located here 1.1017, going down to 1.0992. So that'll be the area we would be interested as buyers. So now again, there's this whole angle about risk management, which we talk about in our other classes. So we talk about sharpening sessions, we talk about risk management, we've got the short-term trading session. So today's session, we have a sort of a weekly plan, right? So we'll be setting up our orders. If you like it, initially you can place it on simulated trading, see how it goes, watch it for a couple of weeks, and whenever you start feeling comfortable, we get into the rhythm, then it's just every week we meet, we plan the trades, you place the orders, and you know review action rather than analyze action for the weekly trades. We also have short-term sessions, short-term trading sessions, which is more intraday. So you can check out our calendar. So we will talk about risk management in some of our sharpening sessions. So right now, let's go ahead and mark this area. Vincent, what's your view on the lowest, the third zone? So third zone is very good, Vincent, yes. But right now we're trading around 1.13, expecting it to go to 1.08. That's about 500 pips away. So nothing is impossible, but highly unlikely. Probability suggests that in a week where we had the Fed funds rate announcement, a 200 pip move can be expected. Again, this is from, purely from observations trading the euro in the past few years, and looking at what kind of reactions, what kind of price movement we get to see after as a reaction to the Fed funds rate announcement or ECB president speech. So 500 is unlikely. 500 is way beyond the daily average true range, or even the weekly average true range. Daily average true range is about 65 to 70 pips at this point. So if we expect 500, so then we're talking about 2 weeks of action, right? Minimum 2 weeks of action. So if you're looking at euro, and not that we haven't had significant news. Last week we had some significant news. So how much more movement did we have? So last week we had a stimulus, announcement of stimulus for the Eurozone economy. How much movement did we see? We sort of took off from here, right? 1.1, we went up to let's say 135. So that's about 250 pips move. So that's the kind of reaction we get as a result to some unexpected announcements. So again, this week we could have some unexpected announcements. Of late, we're getting to see all kinds of interesting price action in the markets, and we could have price move another 200 pips here. Right now, if we choose this area, that's the 1.12, so that's just about 70 pips. So the 70 pips, it's too close for comfort, right? That's as per my trading plan. Some of you are more aggressive and you'll say, okay, let me go with this zone. I would rather be a little cautious and expect a little more volatility and sort of see the reversal of this. Again, this was the area where there was a lot of selling pressure. You can see price was holding here for the entire month of May, right? So for the entire month of May, we 1.1 was a level that held, and finally we broke through that area here in June. So this should be an area of interest for the buyers if and when price gets back to this area, right? So now again, the reason I touched upon risk management is depends on how much risk you want to place in this one trade. For example, if we take entry here, and some of us would be comfortable taking entry here, 1.1036, going all the way down to the bottom of this area. So this is the area where our trading app, uh, based on price action, has figured out that this is the area where the unfilled orders are likely to be, and therefore this is where price is likely to reverse. So if you're comfortable taking entry, you can take entry at 1.1036, and your stop loss will be placed slightly below this line, okay, in the white space below this line. So we're talking about 1.0994. So that's about 40 pips, right? So that's about 40 pips. 40 plus, add in another, let's say 6 pips, so that's 46 pips. So now if we place entry here at 1.1036 and place our stop loss about 45 to 46 pips below. So if you think 46 pips is too much, That's not the kind of usual risk you take on a trade. What you could do is instead take entry slightly lower. So for example, instead of taking entry up here, again, let me change the color. So you could choose to take entry here, or even and then place a stop loss here, right? So that's one option. The other option would be to take entry slightly deeper around where the thicker part is of the flying saucer. So we call it the UFO, is unidentified flying object. More of unfilled orders, but also unidentified flying objects do look like flying saucers if and when they choose to visit us. So you could either take the whole area, the buy area, or you could take entry closer towards the dot within the saucer. Okay, so that way is now you are taking lower risk in terms of number of pips. So here number of pips will go down drastically, just about 30 pips here, instead of going with your 45 to 50 pips. Or the other choice is, if you want to take entry here, you could also take entry here and decide to take about 45 pips of risk, right? So today being our first session, let's be a little conservative. I'll take the entry here, and some of you may be taking the trade for the first time with us, trade with UFOs. Eventually, as we've traded together for some time, we'll see that from our experience, we'll see that we were better off maybe planning our entries around the top of the entire area, the buy area. Okay, so for today's session's purposes, let's take entry at 1.1017, add 2 pips for spread, because this is on the bid chart. So we'll go with 1.1019 as entry. Go for stop loss at 1.09884. Will make it about 35 pips. Yeah, that's fine. Okay, everybody okay with the plan? Why don't we go to smaller time frame if the risk is too wide? Where the risk is too wide. Very valid point, Vincent. Yes, you can always do that. For which you can now go to the 60-minute chart. And if you're looking at that area now, 60-minute chart, see if you can, that helps you get into a smaller zone. Okay, so you can always do that. Again, you'll find that you'll miss the trade as it'll touch and go. Very good point, Iftikhar. Yes, that could be the case. Many times we want to be efficient with risk, but we just find that price comes to this 1.1035 and then just takes off, and we've just missed the trade for a few pips. But that's a trade-off. That's the trade-off we make. Yeah, we want to take lower risk. When you go for lower risk, sometimes you could miss out on entry. So that's a trade-off we take. So today being the first session, let's be a little, let's go on the little conservative side. Vincentius, we can always check, and I'm sure you have your own ways of looking at the chart, right? So Vincentius, we are all traders here. So you would have your particular, favorite formation, maybe on the 60-minute, maybe on the 90-minute, maybe on the 30-minute chart, and you can make it more efficient. Absolutely agree with you. So instead of going with 45 pips, you may find a way to get away with about, let's say, 20 pips or 15 pips of risk. Make sense, Vincent? Yes. Cool. So okay. So let's put in these numbers. 1.10. We said we'll add 2 pips for spread, so that'll take us to 1.1018. Let's round this up. So if we round this up, it becomes 1.1017. We add 2 pips for spread, so that takes us to 1.1019. So let's put that in. So side, we're going buy. So that's our entry, and stop loss goes at 1.0985. Okay. So we've got a safety target. Safety target is at 1:1. So that's not actually, yeah. So that's your 1:1, and this is your 4:1. So we got safety target and final target. Let me just copy that formula. Okay. So sorry, that's a trade on the euro dollar. Yep. So dollar index, not sure how many of you trade the dollar index. Mostly we look at it for orientation purposes, but if some of you are trading the dollar index, let me put in the numbers on dollar index as well. So that's a weekly plan. Yep. So we said we'll go with this area, right? 98.91. Again, with the US dollar, we'll do something similar, which is go with the dot in the middle rather than take the whole zone. So some of you may not be comfortable taking the whole zone. 98.91, but however, I'm sure you'll be observing this 98.91 for entry, and let's take stop loss a few cents about 99.09, let's say 99.14. Okay, so that's 99.14. So that'll be a plan on the dollar index. Okay, let's go ahead and plan some of the other trades. Okay, everything okay so far? So we've got buy the euro 1.1019, stop loss 1.0985. Everything okay with the plan? Any questions? Okay, let's move on. Let's look at GBP USD. Okay, GBP USD, what is step one? Where do I start? We start by looking at the bigger time frame, right? We'll higher time frame. So we're looking at the weekly. Why the final target again? Okay, so we've got two parts to the target. Again, we'll discuss this more in the risk management part. So we've got two parts as target. Now let's say again, depending on your account size, you'll take positions. So let's say you take a position of let's say two minis, for example, okay, or two standard lots. So we'll take exit half, which is one lot here, and the other lot at the final target. So when you exit half your position at the safety target, which is your 1:1, then it becomes a risk-free trade. So then you can just let it be. You can watch it with the comfort of knowing that you cannot lose in that trade anymore. So we've got two targets, safety target and final target. Final target is the real in dollar index is not updated. Safety target, good catch. So this is, okay, sorry about that. So that's about 23.68. So let's take it about, let's say 98.68 area. For some reason the formula is not getting accepted there, so we'll take it at 98 point about, let's say 66. Okay. Okay, this one also needs revision. So we're going with a 4:1 in target 2. Just about $1. So $1 takes us to about 97.91. So with the safety target, we sort of have a risk-free trade, and helps to take half the risk off, and then on the other position, which is the other lot, we can let it run to the final target. Okay, especially because we have a confirmed climate, and looks like we have some room till we get go higher into the maybe the 1.6 area. So looks like we are likely to see the break of this area. Okay, so let's move on and look at the GBP dollar. So GBP dollar, step one is to look at the bigger time frame where we have the GBP USD weekly chart. Again, what we want to do is focus on the climate. Let's look at statistics. Let statistics guide us. So we're looking at the climate. So what do we see here? Do we see a thick dot or a thin dot? We see a thin dot, right? So the thin dot indicates not a confirmed climate, which is we don't know if it's really that bullish, because we see a lot of selling pressure waiting around this area, as we can see. So we could have some of that, bringing in the reaction. Buyers may not be able to. Buyers may not be able to hold with the selling pressure that's sitting around the 1.28 area. That's what the statistics are suggesting. And therefore, what's our trading action if we don't have a confirmed climate? What do we do? What's our trading action? The trading action is to do nothing. In the sense, we'll say pass, skip. Perfect. Niggin, you got it. So we will skip GBP USD. Let's go and check NZD USD. NZD USD again. So we see we see a lot of bullishness here, potentially unfilled sell orders, but the bigger time frame gives us the clue. Now, again, what do we see here? We see the thin dot, right? So we see a move up. A lot of traders will be attracted to, so they'll be speculating, why is the New Zealand dollar getting so strong? And if it's getting so strong, how come I'm being left behind? How come, I don't have a buy position on the New Zealand dollar? Look at it go. It's gone from 0.62 all the way up to 0. That's 300 pips. It moved 300 pips without me. How can it do that? I need to get in, right? So let me get in right here, right now. Right, that's the usual temptation when you see this kind of 300 pip move on the New Zealand dollar. However, when you look at statistics, what do statistics tell you? Statistics tell you it, even if you have a big move like this, the climate is not confirmed. If climate is not confirmed, what's our trading action? Trading action is no trade. We skip, we move. We'll say, you guys enjoy your journey. We'll join you another time, right? The good thing is we have so many other assets to look at, so many other currency pairs to look at. We'll always find trade with uh, other currency pairs, especially the majors right here. So let's check the AUD USD. What do we see here? Again, we see a confirmed climate. Now we see a green signal, we say go ahead, look for a trade. Because we have a confirmed up climate. So on the Australian dollar, so now where do we look for a buy position? So this is our unfilled orders are located around 6468. So may not be likely that we see price going down about 500 pips like we said. The Australian dollar doesn't even move as much as the euro dollar, right? I think it was Vincentius who asked the question before, which is, why not look at the UFO below? And I said the euro tends to not move about 500 pips in one single week. And that will be even more so true for the Australian dollar, which has a lower average to range compared to the euro dollar, in which case, let's look for opportunities slightly closer by. For which we can look at the 60-minute chart. The 60-minute chart is showing us unfilled orders located around the 6802 area. Okay, so we can plan a trade around here, 6802. Stop loss going below 6781. Again, that's just about 20 to 30 pips. Again, we have a choice. we can take our entry here, right on top, and let me set it as default. Okay, so we have a choice. We can Miguel, correct, move on. So we have a choice, and as traders, we take that call. We want to take entry here, 6811, or take it slightly lower, which is 6802. Add spread to, you know, don't forget to add 2 pips of spread, because otherwise you will see price coming to 6811, and price taking off, but we're not in the trade, and then we wonder why. That's because we haven't added the difference between the bid and the ask. So we have two choices: take entry at 6811 or take entry at 6801. Add spread on top. Place the stop loss about 5 pips below this area. Okay. So some of these details as to where exactly to place the stop, and there is a calculation behind it. I'm just pointing out to you because we're not going through the whole discussion of where to place the stop loss. But if you do attend the courses, we run courses on FX as well. If you do attend the course, we have an extended discussion on risk management, how much risk to take, what is the appropriate amount of risk to take, and therefore where should the stop loss go, right? So again, this being our first session, we'll go with the lower one here. So that's our 6802 plus 2 pips for spread, takes entry to 6804, stop loss at 6777, for example. Okay, so 6804. Stop loss goes at 6777. Okay, so we've got a safety target. Let's do a check if the numbers have come out right. Yeah, that's just about 25 pips, so that's correct. And 6912, that's here. That's also correct. So we're good with that. Let's go ahead and check some of the others. We've got the JPY, we've got the CHF, and we've got the Canadian dollars. We've got about this pair is almost near supply zone, right? We will check that. However, yeah, okay, so that's a good point again. We could have sell orders. We could be sitting very close to sell orders, but I'll answer that question in a second. So 3 more pairs to look at: JPY, then we would have looked at all the majors, right? So Negin brings up a good point. Negin's point is it may be close to where sellers are located, no doubt. It definitely, even if you look at the bigger time frames, right? Or when you look at it on the weekly, look at what started here. So price went from here, right? So price, look at how price collapsed from the 0.7 area. From 7 it went all the way down to 0.56, in fact below 56. So that was a big collapse, and so there must be some selling pressure located here. I get your point, Negin. However, the same would have been the case last week. If you saw, you would have been looking at all these areas and you would have said, look at that selling pressure here, right? Lots of selling pressure here. You may have been tempted to short. However, what was the climate telling you? The climate was telling you no trade, right? It's only when this weekly candle closed when we had a new confirmed up climate. Uh, so long or short, there was no trade last week. So sometimes it's just better to wait till we have confirmation of climate. Wait till we know it's the right time to trade and right direction to trade. So at this point, even if we're selling, sitting very close to all this selling pressure, we have a confirmed up climate. India confirmed up climate. We said we'll wait for a retracement, but this looks too far away. That's about 500 pips away. Therefore, we chose the area slightly above using the 60-minute chart. Make sense, Negin? Hope that made sense. So again, wonder where you got that terminology from. Um, okay, so that's AUD USD. Let's move on and look at the other majors. We've got the USD JPY. USD JPY. Again, step one, look on the, what's the bigger picture. The bigger picture is telling us what? USD JPY, not a confirmed climate. If it's not a confirmed climate, what do? Even though all this looks very exciting, right? Oh, look at the USD JPY. Look at it shooting up, and the potentially a lot of sell orders located here. Can I look at a shorting possibility here? Should I jump in here long? How can it leave without me, right? So I want to join this. And where can I join this? Can I go long at 109.38? So that looks very tempting, but statistics tell us, as look for opportunities elsewhere. So we'll skip the USD JPY as well. Let's move on to USDCHF. Now again, think about it. So our plan on the US dollar, the dollar index, is a sell, right? And if we're selling the US, the dollar index, which is against a basket of currencies, the dollar index is showing weakness, and a lot of traders will be attracted to all this bullishness on the USD JPY. They'll be tempted to go long on the USD JPY, right? Now think about it. You will be going long on the US dollar, right? Because here US dollar is the base currency. So you're going long on the USD JPY, whereas you're selling the dollar index itself. So in a manner, it's a contradiction, right? So you're buying and selling the same thing, or rather, we're not really clear on the direction. Ideally, the dollar index is, reflective of the overall strength or the weakness, and we follow the direction of the dollar index, and hence we would have been looking for shorting opportunities ideally on the USD JPY. However, when we look at the lower time frame, especially the 240-minute chart, what we see is an upward movement, no indication of weakness so far, and who knows where this can stop. This can keep going higher, maybe going higher into the 110 area. Okay, so no trade on the USD JPY. Move on, look at USD CHF. Again, look at the bigger picture, look at what the climate is on the bigger picture. We have a thick dot, which is a confirmed climate, which is good news. We can look at shorting, and we also see a big red UFO here, red flying saucer. We can look for a shorting opportunity. However, in this case, again, whose comment was it? I think Miguel, about looking at the lower time frames for refining, or looking at a smaller risk. So here in this case, you can see that's a big UFO, right? So we can, here it's going from, let's say, 9675 all the way up to 9728. That's about 50 pips, and then you add a little bit on top, so that takes it about 60 pips, maybe too much. So in this case, what we can do is we can use the 60-minute chart and look for opportunities on the 60-minute chart, again in this area. So we note the area, it's in the 9700 area, 0.9700. So let's look for unfilled orders in the 9700 area. So again, here we have two choices. So that area now gets split into two, two UFOs. What was one big UFO on the 240 is now split into two, and now you can sort of see the effect, right? So this unfilled order, this plot came up as soon as this formation happened here, right? So there was some transactions here between the buyers and the sellers, and then price declined, indicating to us some unfilled orders located in this area. Price came into that area and was pushed out. So that is the effect we can expect from the unfilled order. So this is exactly what we're expecting. Obviously, we should have seen this in the past. We should have been trading together maybe a couple of weeks back. We could have seen this opportunity. Maybe we could have taken this trade if the bigger time frame climate permitted us and told us it was the right time to trade. However, so this is in hindsight, just to tell what is the reaction we expect when we see a flying saucer. That's exactly what we intend to do. We place a sell order here with a stop loss slightly above. So that's what we've been discussing in this session, right? So we place a sell order here, and we place a stop loss slightly above. Isn't that the plan we've been discussing so far in this session, right? And this is the effect we could have had we seen this UFO in time. Okay, make sense? Any questions, comments? Clear? In this case, we said we will look in the 9700 area. So again, here we're going from 96 0.9686. So let's get a little more efficient here. We'll try and get our stop loss here at 9714. Combine these two UFOs and get our stop loss slightly above. Believe the climate will change time frame to time frame. I mean, if you check daily time frame, it may be different. Correct. Yes, Negin, which is why we've sort of back tested and found the right time frames for the right purpose. So if you're looking for a really long-term trade, then you would have looked at the monthly chart for the climate. Intraday, when you attend our intraday trading sessions, you'll notice we're not looking at the weekly or the daily for the climate. We'll be looking at much smaller time frames. So the choice of the time frames is obviously based on our back testing and experience. Okay, so if we want the trade to play out in the next few days, let's say next 10 to 15 trading days, the weekly is where we check for climate. Okay, good question, Nagin. Yeah. Okay, so here again, let's place stop loss here, 9741 area. So again, we don't want to be taking so much risk. If we take here all the way from that's 685 to 41, that's a good about 60 pips. So let's go with slightly lower here, somewhere in this region. So we're trying to sort of combine this area. So we go from 9706 to 9741. Yeah, that's about 35 pips. 35 pips is okay for USDCHF for a trade that's likely to play out in the next 10 to 15 trading days. Okay, so let's place entry 0 point, or rather plan the trade. Let's see what our stop loss and our targets will be. 9706 will be our entry. So no trade on USD JPY. I didn't even write GBP USD. We're looking at USD CHF. We're going to sell. We're going to sell at 0.9706. Stop loss goes at 9741. Okay. We've got a target. Let's make sure the numbers are right. So the numbers are right. Okay. So we've got 4 more minutes in the session. And we've got one more one more trade to plan. Let's look at USD CAD. USD CAD. Let's look at the bigger picture. Let's look at what the climate is. Climate is not confirmed. So climate's not confirmed, indicating to us that we're better off waiting and watching. And let's see. So otherwise, it'll be pretty tempting for a lot of people, even by using one of the time frames. We see some unfilled sell orders. However, you see where we've arrived. We've arrived in this area, from where, I mean, this seems to be an area where buyers have a lot of strength, right? Look at the last time price was in this area, 1.34. We can see a big move out of here, which suggests that there must be a lot of buying pressure here. So may not be the right place to place a sell, to go in a sell short position. 3 more minutes in the session. I can look at some few questions. Please do type them in again, just in case I missed your questions from before. Or let's see if we can squeeze in one more trade. Any forex pair that you want to look at? So I'll take one question and then we'll close the session, and we hope you join us for the other sessions, short-term trading sessions, or even next Saturday or at Forex Street. So looking forward to see you in the other sessions. Okay. Any questions? Gold, please. Not sure. Okay, let's see if we can squeeze in gold. So again, here I'm looking at the continuous charts or futures charts, not the spot market. So please do adjust it if you need. If you're trading it on the spot market, you'll need to adjust the prices. So we'll get an indication from here. Futures traders can follow these numbers, but spot market traders may have to adjust it. Is this posted on the web page? The recording is it's on YouTube, so you'll be able to see it. So gold, again, we have a confirmed climate here, right? So yeah, so looks like we're going into some, we've got some selling pressure, but that's going into some area of buyer strength in the 1630 area. So again, I'll just give you the orientation, not really a trade. We can't really plan a trade. We've just run out of time. If you want a spreadsheet, you can take a picture now very quickly. So all these will be no trades, no trades. So we've got some trades. We've got trades on the dollar index. We had confirmed climates on the euro, the Australian dollar, and the USDCHF. So we've got 4 trades from today's session. So we'll go over these when we meet next. Thank you all for being here, and looking forward to seeing you in our sessions more regularly. Please do join our other sessions as well if you're interested in the short-term trading sessions as well. Cool. Thank you all, and see you soon. Hope you got a chance, to take a snapshot here.